This is the shifting composition of household savings and the impact on bank deposit growth. I want to link that to the possibilities of a domestic rate cut, because traditionally Indian savers preferred the fixed deposit way, but there's now a Gen Z impact playing out when it comes to retail participation in the markets, Tanvi.
Absolutely. And I think it is something which is definitely a trend we are seeing since the pandemic. So if you look at couple of things. One, the households borrowings have risen. I mean, easier access to retail loans, digitalization, younger population, and plus the composition of household savings. As you rightly mentioned, that Indian household typically 10 years back used to park half of their savings or financial saving in a fixed deposit. Now they are preferring other asset classes, whether it's a property, whether it's an equity, whether it's a provident and pension fund, small savings. And clearly, when you look at the returns, you will realize that they are or they have offered at least till FY24 a much higher return versus the return the household would have got, say, buying or putting their money in a fixed deposit. And other thing which I think the government also has been kind of cautioning is that the tax arbitrage and regulation definitely favors some asset classes more than others. So that is also one of the reason, why we have seen that trend. So why the question is how does it, or at some point will start impacting the rate cut scenario for India? So what we have to realize is that if a household is not getting direct household savings, he will rely on non-fixed deposit uh, pool of resources to fund the credit, because credit growth is still growing faster than your nominal GDP. In fact, if I look at the share of wholesale deposits that have clearly gone up over the recent years. Second is the government has also moved into this just-in-time mechanism for their payment mechanism, so which just to bring in more efficiency to the cash management policy of the government, which has actually reduced the float available to the banks. Thankfully, the banking sector liquidity has moved into surplus, but that was a bigger challenge earlier this year. And the third is if you realize that almost 25% of India's market borrowings are being funded through small savings scheme, which is again a leakage from the banking system, because that savings are parked with the RBI. So it is actually, not a part of the banking system. So we would say that even though my view is that there will be a 75 basis point easing in this cycle, the question is whether it starts in December or March. The challenge for banks is going to be an asymmetric monetary transmission. So it will be very difficult for the banks to cut their deposits in lieu of, or cut their deposit rates in lieu of the cut in the policy easing cycle,
Yes.
because the gap between the credit and deposit continues to remain high.
If you like the video, do like, comment, share and subscribe.